Good afternoon, everyone. Welcome to this Accelerate 2030 event themed Unlocking Finance for the Missing Middle. My name is Ljubka Mitvinovska. I'm a co-founder and global program manager of Accelerate 2030. And I would like to thank you, everyone, for joining us today in person and those joining through the live stream, which we're proud to say that last year's Building Bridges, our live stream was the most watched one after the Building Bridges Summits. Hopefully, we're as popular again this year. I would encourage everyone sitting in the other rows behind to not be shy and also join in the front if that's something you're called to do. So today we have a really exciting topic. We have an exciting lineup of speakers to unpack this really important topic of unlocking finance for the missing middle. Before we jump into these conversations and presenting the speakers, I would like to briefly introduce you to our work with Accelerate 2030. Accelerate 2030 is a global program that we co-initiated among Impact Hub and UNDP in 2016 here in Geneva with the aim to identify the most promising entrepreneurial solutions that tackle the Sustainable Development Goals coming from the Global South or developing and emerging markets, or another name that we're trying to come up now is the Global Majority, to kind of acknowledge that there is no linear notion of development, and also some of the countries that we call developed at the moment, we still have a lot of way to go when it comes to sustainability. So we will use these terms interchangeably. What we do is that we bring the entrepreneurs together with partners and stakeholders across sectors, including the UN, including investors, corporates, and other stakeholders with whom we can jointly work to really scale the impact of these solutions. Since the start of the program, we have implemented it across 33 countries, mobilized many entrepreneurs, supported nearly 500 of them, and engaged with multiple partners across the globe. This success has been possible due to the support of many partners. Some of them are here with us today, including the Swiss Agency for Development and Cooperation, the MAVA Foundation, Pfizer, and the Canton of Geneva, who has helped us in hosting the Accelerate 2030 Scaling Week in Geneva. In terms of our areas of intervention, this is the really big picture, where the work that we do revolves around a few main areas. One of them is really working with the national ecosystems in all the countries where we're present, working with the local impact hubs, UNDP country offices, and other partners to pass on this knowledge around SDGs and business and support them in bringing this kind of thought leadership in their ecosystems. And a lot of it is actually including peer exchange among these partners across countries, because we would normally run the program in cohorts of at least 15 to 20 countries. So for us, it's not a one-way pass on between Geneva and the rest. It's actually facilitating this knowledge exchange among the different countries. Another major piece of our work is the direct support to companies. We have developed a methodology through multiple phases. We have a national skill-ready phase, which is normally implemented across multiple countries, where we would be able to support approximately between 200 and 300 entrepreneurs per cycle. And then the most promising ventures are invited into a global phase of the program, which we host here in Geneva, which we start here in Geneva normally during Building Bridges Week, and we then continue over the next 6 months. And here we've developed a lot of innovative content around connecting SDGs and business, measuring the impact, scaling strategies, investment readiness, and lately circularity has become something really important as content, and I will tell you a bit more about it in a bit. Unlocking finance to scale these solutions is a really important piece. We are doing work on investment readiness and connections to investors. Unlocking markets and integration in global supply chains is an area where we see a lot of potential in, and we would like to do a bit more work on that and harnessing the power of our global impact hub network. And of course, global partnerships. For us, all the work that we do happens across different sectors, and it's about connecting between the entrepreneurs, bigger businesses, the UN, impact investors, and in that way enabling the scale and hopefully in some cases even systemic shifts. So definitely our focus and our objectives, our motivation is at accelerating the achievement of the Sustainable Development Goals through entrepreneurial action, because we believe entrepreneurs really have some of the innovation and drive to move the needle on many of these topics. And the way that we approach this, especially in the last years, has been through the approach of circularity. We believe that the SDGs are objective and circular economy can be an approach that takes us there. There has been a lot of mention, a lot of conversations around climate and climate action. And for us, this is the way that we take this action when it comes to business. And we have done a pilot in the last edition of Accelerate 2030 on circularity across 6 countries, even though we actually trained all the program managers involved. And we've seen some impressive results and a lot of interest to continue doing this work. So we're looking to mainstream circular economy as an approach across our programming. And coming to our contribution to the Building Bridges Week. For us, what we bring to the puzzle is really the voices from the ground, the voices from the Global South, the voices of entrepreneurs, and building this bridge in terms of geography and in terms of sectors. We have been very fortunate to work with some of the most brilliant companies and minds across the globe. These are really entrepreneurs with really efficient solutions and incredible, genuine drive to make change. But what we've seen is that they all have faced, or are facing challenges when it comes to raising funding to scale their solutions. So we were curious to explore kind of this missing middle and understand a little bit what it is. There are a lot of researches, a lot of statistics. One from IFC says that the funding gap is around $930 billion. We can go in different statistics. We know the number is big. And at the same time, we do know from some of the researches that were presented during the day today, from Tameo, from many other statistics. For example, Tameo just presented that there are 77 billion in private asset management, and 15% of those funds are circulating through Switzerland. And this is just the private asset funds that are managing this funding, and it's a fraction. We know that there is more funding circulating. So the point being that there is a funding gap, and we also know there is a lot of funding available. So the idea and the conversation today is how can we bridge that? I wanted to also summarize some of the key points that we've heard over the past 2 days at the summit and the other sessions. So, for example, the biggest effects of climate change, as we all know, are most felt across the Global South, while at the same time, these countries have the smallest budgets to deal with these effects. I was surprised to hear there is more money flowing south to north than the other way around at the moment. And there was a lot of challenging and call to the rich countries and the governments in rich countries to take more action, even though we heard that a lot of them are actually doing a big part on this topic. And there was a lot of mention of the need of robust impact measurement and standards in order to be able to understand what are the needs and what is the impact that is being generated. So in this context, our contribution to the conversation is to bring the different parties that have some stake in this issue, the entrepreneurs, the organizations that design and run funding vehicles, and the development actors who are involved in setting up the framework conditions, and get into a discussion, understand what is needed for us to move the needle. With that, we have, I will just quickly walk you through the agenda. So we will start with opening remarks by Ambassador Frutiger. We will have the entrepreneurs, some of the top Accelerate 2030 alumni sharing a bit of their perspective. We'll have some of the investors sharing their learning and challenges in designing financial solutions. Very interestingly, we will look at the new technologies and their potential to help us with this topic. We will look into blockchain and cryptocurrencies and some of the innovations coming up in this field. And then we will join a short panel at the end among these different groups to engage in a conversation. Very exciting lineup of speakers. We have with us today, alongside the entrepreneurs that you will get to meet in a little bit. And with that, I would like to now welcome Ambassador Christian Frutiger, Vice Director General and Head of Thematic Cooperation at the Swiss Agency for Development and Cooperation. Thank you so much for your support in the past 3 years. It has enabled us to widen and deepen the reach of Accelerate 2030. And we're really curious to hear your insights on the topic. Join me in welcoming Ambassador Frutiger.
Thank you very much, Luca. Hello, everybody. Yeah, good to be here. Pleasure to be at this event. Thanks to the Impact Hub. Thanks also to UNDP for the invitation, and thanks for the cooperation over the last three years, the fruitful cooperation. Swiss Development Agency contributed financially to Accelerate 2030 because it addresses some of the well-known problems as well as it is looking to accelerate existing solutions and find new ones. The problems, we all know them. We know them, that achieving the SDGs by 2030 is slipping more and more out of reach. We know that the challenges have recently increased with multiple crises, conflict, war, pandemic, food crisis, climate crisis, you name them, debt crisis, unemployment crises in the global south or in the mature world. In the opportunity part of the world. We also know since yesterday that more money is flowing from south to north than north to south. That's a sobering. That was quite a sobering notice. And we know that we need to mobilize much more resources, including from the private sector, if we want to manage this global turnaround. And I'm referring here not only to investments, but also to technology and know-how. And yes, we also know that these new approaches very often come from entrepreneurs, young entrepreneurs, innovative entrepreneurs, people who take risk and who are ready then to scale. Social and impact enterprises, or SIEs in particular, can be a powerful source of innovative solutions, such as new products or business models that address needs of our target beneficiaries, the poorest and the most vulnerable people in the poorest countries in the world. Actually, I closed the last panel in the same room a few minutes ago by saying that, originally the role of business was to solve societal problems, and not the other way around, by the way. And I think it's high time that we come back to that. We have many societal problems in the north and in the south, and we have business capacity, including in the financial sector, to solve these problems. There is enough money around. It's just not in the right place, and it's just not distributed evenly. But I am actually convinced that, over time, if we want to make it for the 2030 agenda, and if we want to make it as, humankind in our natural environment, we have to find a solution for this. So we have to be able to actually make money sustainably. And I profoundly believe that this is possible. And I hope that building bridges is just a stepping stone toward going there. So entrepreneurs, SIEs are ready very often to go the extra mile, to actually go below the usual market rate of return in order to produce positive impact, positive societal impact, produce public good for the poor and the planet. My agency, the Swiss Development Agency, has therefore a particular focus on working and supporting SIEs. We believe they're a key ally in achieving the SDGs. We have developed jointly with partners, some of whom are in this room, investment strategies such as impact-linked finance and social impact incentives, SINCs, to address their particular financing needs and reward them for the impact they achieve. In the past 12 months alone, we have supported impact-linked finance programs in the areas of financial inclusion for women migrants, education, clean energy, as well as a regional fund in East Africa for agriculture. That also addressed to the famous missing middle we'll be talking about today. This comes after over 5 years of experience with SINC in Latin America and a first country-level program supporting social entrepreneurs in Bangladesh, to name just a few of our initiatives. So, ladies and gentlemen, our one partner in this space we have been proud to support over the last few years is the Impact Hub, the world's largest network focusing on building entrepreneurial communities and ecosystems for impact at scale. The Accelerate2030 program is supporting entrepreneurs from developing and emerging markets to scale the solutions for the Sustainable Development Goals. So I'm excited and I look forward to listening to the stories of some of the participants of the Accelerate2030 program and the panel discussion that follows. This is exactly in the spirit of building bridges and why this week is so important. The scale and complexity of transition requires all stakeholders, from the private sector, the donor community, and civil society, in order to have an open and frank exchange and to explore with an open mind new, innovative ways of cooperation in order to vigorously advance the 2030 agenda. I thank you for your attention, and I look forward to the discussion and the dinner afterwards. Thanks a lot.
Thank you so much, Ambassador, and I'm happy to hear that we are aligned on many of the points that we raised. Now we move to a really exciting part of the event, which is the entrepreneurs' stories. For me, this is a particularly proud moment to have returning alumni to Geneva, companies that have been here 2-3 years ago or last year, some of them starting at early stage of their growth and now being really successful companies. I would like to show you, to share with you actually all the entrepreneurs that we have present at the Building Bridges Week, or maybe a little bit later actually. Let's start with one of them as a first. So this is a borrowed slide from yesterday's presentation on the session in Agritech, or agriculture and food systems from Hubert Keller around agriculture, forestry, and other land use, just to kind of remind ourselves of how important and deeply reaching impact the way we manage our food systems is. So that would lead me into the presentation of the first company we have today. We have Solubio from Brazil, returning alumni from 2019. They have reached, since the last time they were in Geneva, impressive growth with their solution. They are now a company with 700 employees, have recently raised 35 million, and driving a really transformative solution when it comes to regenerative agriculture. So I would ask you to please join me in welcoming Mauricio Schneider from Solubio from Brazil.
Hello, everyone. Thanks for having us here. So let me talk a little bit about what we do and how we are going, and also our challenges. So imagine a world without pesticides, without chemical pesticides and chemical fertilizers. Is it possible? It is. That's what we do, actually. And we know you guys are claiming, but somehow we can't actually implement those actions. We created Solubio like in 2016, providing a solution where farmers can produce their own biopesticide and biofertilizers on farm. And we do this through what we call Solubio experience. So we set up some laboratories and biofactors, fermenters, on farm, on site. So it comes with containers, or you can build some labs there. Then we give them raw materials, which is basically bacteria made. Also the nutrition for bacteria. It's something like Nespresso. We have the machines, and then we have the coffee capsules. And also the whole quality assurance to make sure that we don't harm the environment or there's no risk. Then a lot of, agronomical assistance. That's the way we do our job. And then farmers, they can save up to 70% in their production costs. And we are more even, in terms of logistics, because you get 5 liters, and then when you produce on farm, it becomes 500 liters. So it's less packaging, less trucks, a lot of things. Our business model is pretty simple. We lend the equipment. In exchange of this lending, we get a long-term contracts, like take-or-pay contracts, to supply with inputs and also the services around. And then, the magic happens. Just a couple of numbers. We are covering now almost 5 million hectares in crops. We are reaching now $120 million in contracts signed. It's a 4 to 5 years types of contracts. Our revenue this year might reach $50 million, more or less, with an EBITDA of 40%, but quite profitable, I would say. And we are reaching now 400 clients with no churn. We have invested already $50 million in the last 1 year. We're planning to invest $100 million more in the next 2 years. This is our new facility in Brazil, quite sustainable innovation center in Brasilia. And talking about fundraising, 2016 we started, 3 months to reach the break-even. We were struggling to get money in 2017, 18. We have no track record, I would say. Then 2019, we started to run like external audit, Big 6 external audit, to try to get money. Then 2020, we got our first money. It was a venture debt fund, $3 million. Then 2021, we got 20 million. We issued a $20 million green bond, and then $11 million a blended finance fund. And this year we got like $35 million in equity, and then another green bond of $30 million. So we started really to get money after like 3-4 years struggling and knocking hundreds of doors, presenting, pitching, and all those things, until they could read our assets and what we were doing. Just a couple of things. We've been to a lot of acceleration programs, but the best one that we ever had, it is actually the Accelerate2030, but we are a great place to work. We were like, please. We won the Extreme Tech Challenge and a lot of things, so we are always learning with our challenges. We were the South Summit most sustainable company, like winner. We have a lot of people. We have a professional management team, C-levels. We have 700 employees, more or less. It changes every day. Agronomists, bioengineers, and all those things. How we collaborate, or how we actually impact like the environment. So basically, running a lot here with time. We have a program for carbon removal, carbon sequestration. We have the water resilience. We have the biodiversity and regeneration, working with the soil and bringing life again to the soil, and also the social impact that we have. Just quickly view. So when we're talking about soil management, it's about it's about maintaining soil coverage, soil disturbance. When we talk about biodiversity, you add more microorganisms there. We have crop rotation, crop mix, and a lot of things. Also, we have an integration, of forestry, cattle, and also landscape restoration, by using our technology. You just use. You don't need to do anything more. You just apply the products there. It's simple as that. And then we have the sustainable management. So we reduce the usage of pesticides, or we eliminate. And also we have this whole social impact. We are generating a lot of jobs in rural areas, and also female jobs, women jobs there. So a lot of qualified jobs. Also, we talk about biosecurity, food and meal safety, and also, reducing costs, because agriculture is not affordable today. So that's pretty much what you do. There are a lot of microorganisms where can actually contribute a lot, to soil disturbance or biodiversity, agrochemical usage, a lot of things. So yeah, that's what we do. We are happy to talk to you. We are trying to come to Europe, but it's not that easy. You guys talk a lot about innovation, but then the legal frameworks, it's too complex. We need to stop talking and start doing. That's our challenge here. Thank you.
Thank you, Mauricio, for that presentation and for the incredibly important work that you're doing. We're thankful for that. Next up is another very exciting company doing also really important work in another sector, which is healthcare. And sorry, let me figure out the technology here. That's Mauricio's contact. Yes. Next up, we have Aaron Prabhu-Stanley from Lancet, working on fighting diseases of poverty. Aaron, the mic is yours.
Thank you, Lubka. Good afternoon, everybody. It is shocking how, after decades of progress, the cases of malaria are on the rise once again. It is more than 1,500 registered deaths every single day to that disease, even today, in such a technologically advanced world. It was back in 2011, I was working in the textile industry, and on a business trip to Kenya, I found myself in the funeral of a 4-year-old child. I was shocked to hear that the child died from a mosquito bite. I left Kenya that trip as a changed person, determined to do something about it. And fast forward, 5 years later, I was back in Kenya, this time with my business partner, meeting with the Ministry of Health, discussing their malaria strategy. From that point, there has been no turning back, and Lancet has developed a unique 2-track approach, heeding the call of WHO, solutions which are both scalable and sustainable. I don't see the slides moving. Okay, here it is. Yes, I can see it, yes, perfect, thank you. And on track 1, what we do is we pick up the existing technologies and we significantly improve them by margins that disrupt the status quo. As an example, with our treated bed nets, we have a patented slow-release technology of binding the insecticide on the yarn through microencapsulation, and we also use dual active ingredients different on the roof and the sidewalls so that mosquitoes cannot build resistance easily. And on our indoor residual spray, the product lasts on walls more than 18 months, which is more than 2 times the existing products in the market. And on track 2, we have a drug discovery project where we are going back to nature and screening natural compounds. And we have screened more than 200,000 compounds, which have given 21 compounds which are in the next stage of trials. And this project is being funded by the Bill and Melinda Gates Foundation. And all of this wouldn't be possible without a diverse and experienced team comprising of both scientists and entrepreneurs. And apart from that, we also have partnerships with leading research centers such as the London School of Tropical Health and Hygiene, Ifakara Health Institute in Tanzania, and many more. And on funding, we have raised more than $10 million in the past 12 years and achieved significant milestones along the years. And on the research and development, we are well past the risk stages, and we are very close to market entry. And on the market size, the malaria prevention market is at little more than $2 billion, and it's only expected to grow in the coming years. And on our business model, we have 3 channels. One is through the Ministries of Health, the second is through the global donors, and especially these 2, we call them a de-risked market because both the channels have last-mile delivery in sub-Saharan Africa. And on funding, our current ask is for 20 million euros in equity and loans, out of which 5.5 million euros is already secured. You might recall I mentioned more than 1,500 deaths a day, more than 70% of which are children under the age of 5, which means we are losing 1 child every single minute. So despite all of these advances we have made in our company and the successes, for example, the deep partnerships and engagement with the World Health Organization and the Ministries of Health, the funding from the Gates Foundation, and various partnerships with research industries, we still have challenges around fundraising. I would like to highlight on 3 of them. Our investors, we see they lack the understanding of institutional buyers because it's a very niche segment. And we would like to say that this is an opportunity in itself because this market is de-risked and predictable, and they also have last-mile delivery to every nook and corner of sub-Saharan Africa. And being a healthcare company, most of the time we find ourselves with pharmaceutical-based investors. And since we work on vector control and we work on the bottom of the pyramid, we focus on high margins and high volumes and lower margins. So when the pharma investors hear this, we see them slightly fading away. But we see that through bigger impact and through profitability is what we are trying to achieve here. And then on the fragmentation of impact investors, we see that for many investors, profit comes first, and impact is just a conduit. And then we see another set of investors in our conversations where they are not able to differentiate between impact and profitability. For them, both are the same, and if we want them to prioritize one over the other, we see that it's really a struggle. So with all of these, we see that there are many opportunities investing in healthcare companies such as us. And I'm here with my colleagues and very happy to have a conversation hereafter. Thank you so much.
Thank you so much, Aaron. I forgot to mention that you started with participating in the national program in China. You're now very close to us in the Netherlands, and showing how companies starting anywhere in the world, when they have good purpose, they can grow across the globe. Next up, so now we heard from the entrepreneurs. The idea is to always start from the entrepreneurial solutions, give them the voice and the platform to share the innovation around their solutions, but also the challenges they're all facing. Florian, thank you so much for joining me already on stage. Next up are now the people that are actually involved in designing and managing financial solutions, driving finance for the SDGs across emerging markets, to also share their the opportunities, but also challenges that you guys are facing. And Florian is a dear friend of the program and an early supporter that was there in the first investor meetings and investor readiness sessions. Thank you for that, and thank you for joining us today. Join me in welcoming Florian.
Thank you. Thank you. So exciting times. We're here standing at building bridges, which are so much needed. But also we're standing here at a very difficult time where we have inflation, interest raising, investors are confused, you cannot read the market, food security or insecurity slamming specifically hard the emerging markets. And we're still having hope here to move the needle. Not hope from a help position, because our learning is that nobody wants to be helped. Nobody wants to be pitied at. So rather than talking about poverty uplift, let's talk about economic inclusion, economic empowerment. So where I actually like very much your comment of the global south not being the global south, but the global majority, standing here and talking from the global minority, in the same sense, and that's what we try to solve. And that's actually where we think there are solutions. So what we typically do at Bamboo Capital Partners, we invest private equity and private debt in MSMEs in emerging markets. Rural, typically it's access to money, access to energy, access to healthcare, access to education, but then a lot their income locally is smallholder farming. Funny enough, our food insecurity comes there starts. If we understand there was a good slide shown before, Yupka, of the importance of smaller farmers for the global food supply. So we are all interlinked. We cannot think national, we cannot think regional, and specifically also exciting is technology, because technology resolves access and affordability for people around the world. And that's what we try to work on initially. 15 years, we have invested over 100 companies in Africa, Latin America, and Asia. And in the same sense, now looking at how can we start moving the needle. The problem is always you have a financial investor looking at what we do. Historically, as an impact investor, standing on the bridge now, yet you had the finance people looking at us saying, yeah, you say you do financial returns, but it's, you're tree huggers. Yeah, it's more about those social good. Or you would have the philanthropist looking at us saying, yes, we know you say you do socially good, but really you're disguised sharks because it's all about the numbers. But at the end, and Ambassador Frutica, I really loved your comment, the essence of a business being to solve issues of society, which we forget sometimes when we chase the profit, when we chase growth, and when we're all concerned. And that goes actually back to the intention of not social entrepreneurs, but just an entrepreneur having a stakeholder value, not a shareholder value only. So here we are now later. We have several funds, and it's interesting also the funds, it's not a bamboo fund anymore. We started with bamboo funds, where we raised the funds, we deployed the funds, and we measure the impact on the ground as we measure the financial returns. Sometimes very challenging in the geographies, just geopolitically to operate, to invest in the risk. But also we did not move away from small tickets, risky tickets. And actually when we talk about the missing middle finance, it's beyond microfinance. We know microfinance works. But the companies, the MSMEs are in the missing middle. They don't get the finance locally, equity or debt. And that's something we want to solve. And that's actually where we, for example, have a great collaboration with SDC, with International Trade Center, to look at blended finance solutions, where you get a first loss, typically a grant in old times going into an area to do development, but not knowing what's going on, but seeding a fund, technical assistance aside, alongside, so that we help the companies to become investable, not we as an asset manager, but the technical assistance provider. That first loss decreases the risk-reward return scenario for actual impact investors and even financial investors to invest in the fund, and having a full alignment of the theory of change, but also on the profit and risk-reward return. It's easy told, it's very hard to raise. It's very difficult to explain to a normal financial investor to understand, how to measure risk-reward return, and so therefore, this endeavor has growing steadily. We can prove that the models work. Usually we start investing first with the first loss, which is the catalytic capital, create a portfolio, create and then start talking to the private investors. But still, our funds are too small. Our funds are now, again, concessionary, not last year, but now because of the interest rate rising, we are more concessionary. So we have a higher need on the ground, also with what's happening geopolitically and also from an economic point of view, but also it's tougher to raise. And that's why we still have that dream, and we have announced that, in Davos, pre-pandemic, and then it was a little bit of pause, but really to see how can we structure something in a way where we can tap into mainstream financial markets, in a way that it becomes investment grade and to invest in. And we're still working on this. We hope to announce something soon, as we have a fund with IFAD, International Fund for Agriculture Development, where we have certain parties invested and provided first loss capital, specifically a Swiss Development Corporation. We have the Build Fund with United Nations Capital Development Fund with their team on the ground to finance SMEs in the least developed countries. We have a fund for gender with a climate angle also, together with International Trade Center and CARE, a big NGO, on there. And so the intention was really, and it's difficult also from alignment, it takes time, to have different participants with their skill set all working along, that we're not talking only on an inclusion on the ground for the beneficiaries, but inclusion all along. Type of capital, the expertise provided, how to help in, so really to model that through. We believe it's the right way to do. It's take time. It's difficult also to have an alignment of an asset manager telling an international NGO how actually impact investing should work, or to a financial, mainstream financial player to explain them how we measure a theory of change and how that actually a first loss, not a typical financial first loss, but a catalytic capital is de-risking the others. So in the same sense, I hope to share a little bit on that with you. I can applaud these companies specifically here because you have profitable business plans. And I'm actually surprised also on healthcare side, very often we do mitigation of some of the diseases, not from a profitable point of view. And here's a solution actually which should make it for the population to pay. Thank you so much, and thank you for the invitation.
Thank you. Before leaving, Florian, because I know that's the first part of Morgan's presentation, your personal why. What drives you to do this work personally?
Okay. So when I came to Geneva and I learned about impact investing, I met my partner Jean-Philippe on the football field. This relates back, when I was working in Mexico, I had created a non-for-profit organization in Mexico on continuous medical education, previous life. We were donating material for the indigenous population. I was invited to go there as someone donating. I went there, it was a truck with an OR inside, I was sleeping in a tent, and I felt so good. And I remember a little child being operated on the cleft lip, draped up, operating, and I felt wonderful. I put it on the front page of the newsletter of our foundation in Mexico. And 6 minutes later, I learned the child had died. Why? Because there's no nurse, there's no pharmacy, there's no doctor. And I said, so hold a second, something is wrong here. I want to feel good, and I want to help, but it's not about me, it's about the others. And that's when I learned that impact investing is actually putting myself at risk, and investing and creating infrastructure and supporting infrastructure, which goes back, Ambassador, as you said, the essence of a company. And that is when I got the invitation from Philippe, I could not say no, and I had to jump.
Thank you so much for sharing. I think these personal stories are as important as our business stories. Next up, I'm very pleased to welcome Morgan Loisel, I hope, Loisel. Welcome. She's joining us from Zurich, iGravity. You've been a really interesting speaking and thinking partner when it comes to designing these innovative vehicles. And you're here to tell us a bit about your impact-linked financing vehicles. Join me in welcoming Morgan and the stage.
Thank you. Maybe I need the people, right? Yeah. So thanks a lot. My name is Morgan. Thanks for having me today. So I have slides. So I'm working for iGravity. So we are an impact investment and consulting firm, so based in Zurich. And I was asked by Ljubka to start with my personal why. And I want, or why I'm here today, is because I would like to reinvent finance. So something as big as that. And I think that came from my background. So I started in the financial industry. I spent 7 years there, I think too long. And years after years, I was really getting frustrated to see that capital was not really flowing where it was the most needed and where it would have made more sense. So 2 years ago, after these 7 years, I decided to quit my job and to try to explore new way of doing finance. So it's when I joined iGravity. And what we try to do at iGravity is that we utilize finance to build a more equitable and sustainable world. So we are 20 ultra-motivated employees. We are in 3 locations, and we are working with both the development actors, but also the finance actors. And we have 2 business lines. On one side, we do consulting, where, as I say, we try to help development actors work more efficiently. And on the other side, we also are building our investment advisory services. And here we serve all the impact investors, because they are what we call impact-first impact investor, but also the finance-first impact investor. And those 2 types of investors have different needs, so we developed different solutions for them. And today, I don't have time to present everything, so I will focus on one of our solutions, which is at the intersection between the 2 first bubble you see on this slide. So I would like to speak about impact-linked finance. So Mr. Frutiger mentioned it before, but maybe before digging into the details, I would like to explain you why we started with this impact-linked finance. And what we try to do with impact-linked finance is that we try to address market failure. So this mismatch really between the supply of capital and the demand of capital. Because on one side you have the private investor and even the impact investor, which are not ready to compromise on returns. And on the other side, you have the impact enterprises, which are most of the time, at least during the early and growth stage, below what we call in the investment space, the efficiency line. And with impact-linked finance, we try to move these impact enterprises upper on this efficiency line. So we try to correct this market failure and think more innovatively about finance. So try to imagine a bit how it would look like when these impact enterprises would be remunerated for the impact they are created. Because that is really the market failure that we have observed, and that's the idea behind impact-linked finance, so to provide better terms of financing for better impact of these impact enterprises. So maybe to make it more concrete, I would like to present one of the vehicles that we have, which is called the Impact-Linked Finance Fund. So it's an open platform where we try to practice this impact-linked finance. And as you can see, so it's the vehicle in the middle. The idea is that we pool grant capital from different actors. So we have on one side the development actors like the SDC, but also ADA. And on the other side, the more philanthropic actors, so different foundations like Jacob Foundation. And we pool their grant capital within this impact-linked finance fund. And we deployed this funding using impact-linked finance to impact enterprises. And the idea behind that is that the impact champion would be accessing larger amounts of low-cost capital to then scale their impact and their activities. We have 2 instruments. I will not go into the detail, but we have the social impact incentives, where the impact-linked finance fund is playing the role of an outcome funder and giving limited payment for positive outcome to the impact enterprises. And we have impact-linked loan, where the idea is like a normal loan. The only difference is that the interest rate or the principal of the loan would be linked to the impact achieved. So now, because we have entrepreneur in the site, for which entrepreneur it is. So it's one of the innovative finance instruments beyond or between or among a lot of other instruments. So it's not the perfect fit for all the enterprises. That's why we look for enterprises which have a strong evidence of impact, which have a market-based model, which have a proven product and services and potential to scale. Because the idea is really to be a catalytic investor and help them scale their business. Here are a few examples. So we invested in one company in the health sector and help them really keep their impact while they were scaling this activity to avoid this conflict of interest between getting profitable but also keeping your impact. Another example is Kilemo Fresh. So in the agricultural sector, here we were the first lender and we helped them scale a new activities within their company. And to conclude, I'm already over time, but maybe on the main challenges and opportunities we see with impact-linked finance. So on the main challenges, for us, it's quite difficult sometimes to find the right entrepreneur, and not just because of the entrepreneur, but because of the requirement of impact-linked finance, but also requirement of our donors. It's difficult also to identify donors because not all of them are eager to try new ways. So we are super glad to have SDC on board, among others. Finding the balance between theory and practice is also sometimes difficult because you have the entrepreneur, they have their reality, and we have to adapt to that and be aware of that. On the other side, on the opportunities, so we would like to target broader range of companies. So we could also help bigger companies to move to the impact side and not target only the social enterprises. And we would hope to attract more concessional investor, because with impact-linked loan, you could also repay something, but it has to be concessional. And we are also trying more and more to improve our efficiency to make sure that we continue doing these small tickets, which are really adding value for the entrepreneur in scaling their impact. So I hope I didn't use too much of your time, but thanks a lot for your attention.
Thank you so much, Morgan and Florian, for also sharing your learning experience and also your challenges, because normally you're seen as the people that have the money and that should distribute more money, but it's good to create a bit of empathy and understand that this is a complex game for everyone involved. Now we would move to looking into how the new technologies, and especially technologies like blockchain and cryptocurrencies, help in addressing this issue. In the last few months, we've embarked on this learning journey together with the Cardano community and their project Catalyst to understand a little bit what is really the potential of blockchain when it comes to amplifying impact in terms of improving operational efficiency for companies, in terms of impact measurement, but also in terms of accessing more decentralized, democratized way of funding. So I'm really happy to welcome today here Trishala Suresh from CardaShift to tell us a bit about their work and about some of the insights we've been getting from our first research projects together. Thank you for coming today, Trish. Please welcome her on stage.
Hey everyone, good afternoon. My name is Trishala. I'm the Impact Assessment Lead at CardaShift. I also head up a small impact team at SmartChain, which is a Web3 consultancy based in Paris. To begin with my personal why, I was born and raised in India, where we have the concept of frugal innovation. So the idea basically means you build and you create solutions with what you have. It doesn't matter if there are no resources, but you'll figure out a way to do, and you'll figure out a way to build for community. So with that spirit, my personal why and why I started working at CardaShift is I truly believe in democratizing the ability for anybody to create impact. You know, my pockets don't run deep, I don't have millions or I don't have thousands of dollars, but if I do have 50 or 100 euros, I should be able to invest in a project I like, I should be able to support them. And so with that spirit, I really started with this project and the team in the summer of 2021. So let me tell you a little bit more. So CardaShift is a Web3 marketplace for positive impact. So just to dial back, Web 1 was read-only, static websites. No user could interact with it. So this was a phase between 1994 to 2004. Then from 2004 to now, you could also read and write. So you can create content, and this also, since 2004, marks the emergence of social media platforms. But then comes Web3. So this was a term that was coined by the co-founder of Ethereum, which basically means you can read, write, and own. So you don't have to put all of your trust into huge corporations that control your data, but you can be the owner of the content that you create. So with that, let me tell you a little bit about why we exist in the impact space, right? CardaShift recognizes that this booming impact economy, and I won't go much into this because Luca has also earlier highlighted that there is a lot of money, and we've seen a 40% growth this past year in the impact investing market itself. And also with the measurement market, what we see is that it's going to grow 5 times to 5 billion by 2025. So we came to the question of how do we really value this? So this, I'm not just talking about impact that's generated and is quantifiable, right? Like a carbon molecule is something you can account for, you can track it. But what about impact that is social? You know, for example, with the case that Lanson presented is something I like. That's social impact. And even though it's invisible, it's really hard to track. So we're really trying to rethink and bring this back to citizens and say, how would you value a project that's generating that impact? And so we're trying to create an infrastructure that's governed by citizens. And so where we really come in is we take transformative projects, so they can be impact-oriented companies from startups. It can be a project from a nonprofit or even within a large corporation. And then we provide them the infrastructure to value that particular impact and open access to an ecosystem of actors. So what we're trying to create is a token-powered, decentralized, autonomous organization for and by citizens, investors, as well as experts. So here our first value proposition is to really create impact NFTs. So NFTs, I know, get a bad rep because sometimes it's about GIFs or JPEGs, but we really try to rethink the technology because it's a lot more sophisticated than that. It can be a positive impact value aggregator. It can hold utility value. It's something that's liquid and tradable, so it can function as a proof of impact. There's also a way that it can embody reputational value. So if you have brand commitments as well as values you want to showcase, it can be captured in this. And the most important thing is that it is a proof of on-chain digital ownership. So here, what we're really trying to do is bring it to the idea of if anybody in this room owned an NFT, and that is adding to the idea of like a citizen investor. So if a particular project has its own NFT collection, and then you invest in that particular project by owning that NFT. And so here is how do we really do it? We select the project. We also check and integrate the relevant data to design the utility of the NFT, as well as to see, okay, how do we get citizens to interact with the project itself? This is one example that I will give just to highlight is Pixo is a company that's trying to rethink the reuse system. So they're launching containers whereby it's trying to reduce our dependency on single-use packaging. So what Pixo really does is trying to do is offer a fleet of containers as an impact NFT. So here it means you and I who are really committed to reducing our footprint or use of single-use plastic, we would buy that particular NFT. And what that does is it helps Pixo raise money and launch these fleet of containers to fast food companies as well as local restaurants. And for the amount that's generated from the NFT, it goes into a DAO, so a treasury. So in this treasury, it is open to give credits to citizens who have invested in the project for actually contributing to this cause. And what it also does is that it's a pool that's available for Pixo as a company to use at any point. So it's really just an innovative way of thinking about fundraising. I see that I'm over time, so what I will do is this was to end with a use case, but let me follow up with the work that I've been doing and the work that CarterShift and what we'll be doing with the Cardano Foundation as well with Accelerate. I'm going to skip through a lot of slides here, so please close your eyes. I thought it was like 10 minutes, but like close your eyes and open it in like a minute, okay? Tack, tack. Okay, that wasn't that bad, okay, but anyway. So we've been working with Accelerate for the past month, and we had 2 workshops, namely. So one with their entrepreneurs, and secondly with their investors. And we basically asked 2 questions. Sorry, I have to go back. So one is, how can this technology be used by entrepreneurs to obviously scale impact, as well as drive the achievement of the SDGs? So here it's, can we assess the impact better? Can we give citizens the power to design an impact metric that they see more valuable, rather than, let's just say, the ESG metric? And secondly is, we try to rethink, okay, how can the technology be used by Accelerate itself to better support their entrepreneurs? So, Sylvia, as well as the team here, has kindly put together a survey and circulated it, and all I know is we got 42 respondents. We learned that more than 70% of them are interested in learning about tokens, crypto, and smart contract, which was very interesting because it was in a group that really did not know or were at beginner level for crypto. And so it's really interesting to see that another 69% are also interested in seeing what are the challenges that are kind of present in trying to understand how to deploy the technology. So to conclude, we learned, I would say, three main things. So one, it's an interesting technology for fundraising, but it's immature at this point. Two, explaining the choice of crypto to use and blockchain is a bit of a puzzle at this moment. So there is a lack of understanding and distrust because of speculation, volatility with tokens. And with our investors, we learned is, well, they just want to understand how to use it and also when to use it and when not to use it. So that kind of brings me to the end. And thank you so much. Yes, you can close your eyes again, but no, thank you.
Thank you so much, Trish. I understand that we asked a lot of speaking points for you in 5 minutes, and we can unpack that in conversations after the event. We will briefly turn now to the last entrepreneur story we have for today. It comes from Unergy from Colombia, and I would invite Eduardo Andres Ospina Serrano to join us on stage, as you are a company that is actually actively using blockchain in your work, and especially when it comes to fundraising. So if you can very quickly guide us through your presentation, and then we will conclude with the panel for today. Before you start, I would like to also mention that there are multiple Accelerate 2030 companies present at Building Bridges. Sampangan from Indonesia was present in a session on blue investing yesterday. We have Rainbow Ecosystems from Ukraine today with us. Shout out to Raphael Petit for joining us. They work in sustainable housing, something that is even more relevant in this context. But thank you, Raphael, for taking the time to join us. And Hirex will be together with Lansen present at a health session tomorrow, which we will tell you about. And I would just like the team to raise their hands just for you to know who else is with us here in the room. Santu, Mala, Sylvia, if you would like to speak to us later. And Mala takes the credit for the global majority framing. If you want to learn more about her research, you can go talk to her afterwards. Eduardo, over to you. Thank you so much for joining.
Okay. Sorry. Yeah. Okay, hello everyone. I am Eduardo Espina. I am CEO and co-founder of Unergy, a centralized protocol for financing clean energy in Latin America. And first of all, I want to know how many of you have invested in Latin America in sustainability or impact previously. Raise your hands. Good. Okay, all of you, please talk with me later. Yeah, and how many of you have invested in blockchain, crypto, or something like that? Good, all of you, the same, okay? So, today, we have a financing gap for avoiding a climate disaster that is $2.4 trillion in the lack or the gap for financing sustainability that we need today for avoiding a climate disaster. And that is why renewables are growing faster than ever in a market cap worth $200 billion, but in a market worth $200 billion, but Latin America is just investing $20 billion in clean energy. So that is why we created Unergy, and that is why we have faced this problem that is Latin America has a lack of liquidity for financing clean energy, but we also understand and we also find people like you that want to invest in clean energy projects in emerging markets, but there is not an easy way to finance clean energy projects because it's very difficult to find that projects. So that is why we created, I don't know how to, okay. That is why we created Unergy, Unergy as a platform connecting companies or connecting lands needing funding for being financed with investors who want to invest with a profitable and a sustainable purpose. We started financing projects. We built this platform where investors could invest easily in just 5 minutes in projects of clean energy. And we offer to the consumers of energy a tariff of energy that is cheaper, allowing them to have their projects without investment costs, without debt, and without maintenance costs. We make charge of all of it. And also, we started using blockchain for generating traceability of the projects, of the clean energy generated, and all of the carbon offset that we're generating clean energy. With blockchain technology, we offer to the investors and to the companies that we're financing real-time metrics of the project. We generate truth and traceability of everything. And we use the blockchain with smart meters for generating all the data and metrics. Sorry. We have helped to finance more than $3 million until today, with more than 1,000 retail investors. We have financed more than 25 projects. I am having a problem with this. Yeah. With more than 1,000 retail investors, with 3 institutional investors also. But we generated a problem with that. And the problem is that we have been growing, and we generated a problem that we have $30 million to finance in a portfolio of projects between Colombia and Brazil. So the problem is that we don't have enough liquidity in our platform coming from retail investors from Colombia. So that is why I come here, because it is very difficult to find a lot of retail investors. So with that problem, we understand that we have to change. So we started to combine institutional investors with that retail investors who want to invest in our platform using blockchain for traceability for the institutional investors. But also, we launched a crypto token that is the UWAT. This crypto token is a token totally collateralized in solar energy assets. That means that if you invest $1 in our platform, you are buying, for example, 1 watt, physical watt, with this UWatt. So this means that we are like a stablecoin totally collateralized in clean energy assets. That is very important because with that, we offer to international investors the possibility to invest in us in an easy way, especially for retail investors, and for institutional investors, an easy way to have traceability of everything. This is the curve of the compounded interest of a project of reinvesting in the token that we have. If someone invests $1 million, they will get in 30 years $20 million reinvesting in others UWatts or others but in clean energy assets. And we have a lot of projects in Brazil and Colombia to finance lands projects that are generating energy to the grid. And finally, I want to invite you, for all of you, to join us in the purpose for massifying and democratizing clean energy. And thank you.
Thank you very much, Eduardo, for offering this inspiration of how new technologies can help in the energy transition, but also raising funding. And now I would like to propose to swiftly move into the panel. And I would like to invite my speaking partners. Please welcome Saba Sobani, Director of UNDP's Istanbul International Center for Private Sector Development. Welcome. Then I will invite to join us, I guess, Mauricio from Solubio. Trish, we invite you to join us again on stage, maybe finish some of the points that you started. And Florian from Bamboo Capital Partners. Let me just also show you how you could participate in the conversation. So that's our panel. And sorry, just thinking, learning from the previous days of the summit and how good Slido worked, we would like to invite you to scan the barcode. If you have a question, drop one inside. I will do my best to include a question or two from the audience. Welcome back, everyone. I would actually like to start with Saba Sobani. Thank you so much for joining us today. We still haven't heard from you. If you can kick us off by telling us a little bit about the work of UNDP on this topic.
I mean, it's been incredible. I think it's been 6 years since Accelerate2030 was established. And look at where we are in terms of the Geneva ecosystem, the cadre of all these outstanding sort of ventures coming here. I mean, for UNDP working with STC and Impact Hub and the other partners, I mean, it's a great validation. But I think the big agenda we see from the UNDP side is how to still build that ecosystem at a country level, right? What are the levers we have? Yesterday, we brought the special advisor of the president of Nigeria here, and there was a very targeted discussion we have. We have one product called SDG Investor Maps, which is basically identifying country-level opportunities that are SDG aligned. What are the business ventures that are the right business models within it? What are the regulatory sort of issues you face? And the audience really had very specific questions for her, like, what do I do with my FX? What do I do with the talent gap I have in your country? People are leaving. So I think this is an important part of the agenda we want to lead, which has 4 elements. One is a public finance one. We need governments themselves to align their own budgets and their financing with the SDGs. For example, fossil fuel subsidies in the order of $500 billion. I know it's become a big issue around the world, but I mean, that is one issue that, for example, affects how can you expect enterprise and investors to do the right kind of business model design and investment unless you address this. The second part, I think, of this sort of agenda, which we discussed, is around impact management standards, regulation versus voluntary. I won't go too much into those details. I mean, this is one of the crux. And of course, I think when we think about at the enterprise level, we are working with Impact Hub in terms of these impact venture accelerators in over 30 countries. In Indonesia, in Armenia and others. And with the investor community, I think how we can also mobilize domestic capital resources. With Bamboo, for example, in Malawi, we have looking at a sub-fund where we have 2 local pension funds that are supporting sort of a Malawi sort of growth stage enterprises. That's one example of crowding local capital. And also, I think on the sovereign side, looking at SDG type of bonds and sustainable bonds. The why, the question you asked at the beginning, I'll also answer. I come from a family from the borders of Afghanistan, on the Iran side, farmers, saffron growers, the most important spice in the world. But I was born in Burkina Faso, so I'm African. We have businesses in Congo, Burkina. I know a little bit about business in Africa. And then I worked at the Idea Lab, which was an incubator. Then I went to Silicon Valley. Then I went to Singapore. I was a failed entrepreneur, so I decided to be a bureaucrat. And sort of the thing. So that's sort of the background. Thank you very much.
Thank you, Saba. Maybe a short follow-up question. What do you see from these different interventions, especially when it comes to the finance piece and the investor maps that you've been doing and trying to connect investment opportunities with investors? What has been working particularly well? What are your initial learnings?
I mean, we're at the coal face of policymakers in these countries and investors, right? And you know, just the impact story for pension funds doesn't ring a bell, you know? It's like red, red, red in Nigeria, etc. So I think that there's a global thesis around climate and climate-related energy. So that narrative, the business models are where if we can bring that. So they really, I see, if you ask me right now, SDG remit is one thing, but really when we look at climate, food systems, and finance, fintech, finance, I mean, those are the elements by which we can get enough of a crowd of people like you and others to come to the table. The second most important thing is when there's capital outflows coming from Africa and those countries, I mean, we really, the countries have to have skin in the game, and the local investors have to have skin in the game. One thing I will note, for example, just coming from my own family-owned businesses in Africa, you know, they know they're embedded, they know what's going on. If you get the second, third generation to have impact businesses, they can leverage, there's a whole de-risking that people don't know is happening around it. They can create those sort of growth enterprises. Thank you.
Thank you. Thank you for setting the scene. It brings us to a few follow-up questions for the panel. I will move to kind of the blended finance piece, which you actually pointed to. And Florian, that's basically the model in which you operate. Morgan also explained that there has been a lot of conversation around blended finance at the summit. Someone said blending is trending. And my question is it the silver bullet, and what's really working, what's still needed? We heard a lot of call to governments to put even more funding, more of this catalytic funding. So yes, is this the silver bullet? Where is it working particularly well? What's needed for it to reach even more entrepreneurs on the ground?
That's a good question. I like the idea of blending being trending, but sometimes I don't see that, unfortunately, yet. But I mean, the gist of it is, if you want to invest, and thank you for the reference also, Malawi, for example, being very hard hit right now economically, heavily hit. So in order to invest, let's say, if you want to support economic empowerment in a country, you need to invest in SMEs. Yeah? Switzerland is not rich because of the big banks or because of the big pharma companies, because of thousands of SMEs. And so if you want to support economic empowerment and the wealth of a nation, you have to focus on the SMEs, which are usually the most vulnerable ones, because you have a problem economically, boom, they're wiped out, which is the same with the middle class. So now what's the intention is, with blended finance mechanisms, actually, that you use different layers of capital in order for the overall capital flow in. But you have to build it bottom up. You have to first identify investees, and therefore the work from UN, for example, or from a lot of aid organizations on getting the companies investable and support them, should be always to look at not as a one-off, and sometimes distorting the market. For example, in agriculture, very often you have grants coming in and distorting a market. It doesn't help. But really in the intention, how can I help the company to grow so that in a second stage I can start maybe results-based finance. So it's still technical assistance, and we manage some of those pockets from the World Bank, for example, in Malawi, Burundi, or Haiti, for example, which is a tough place to operate, in order to get companies off the ground. And then you go into, it was alluded first also on the slides here in terms of an impact first fund. That's what we are usually labeled at Bamboo. We are on the impact, we are the less commercial side. But that's where we can see now to invest. And this is the part where you start with catalytic capital, grant money, seeding the fund. STC is doing this, and successfully, so that you invest. Initially, you will burn some of the money because it's not meant to be, it's a grant money. It's to take the risk, to get the portfolio grooming, and then when you have to have a critical size, you start becoming profitable, and that's when you can attract private investors on top. There are different layers. You can have then, a mezzanine share class, a senior share class, or you can also leverage, if it's debt funds, those. And that's the endeavor, and that's also going back to what you mentioned. 7 years ago, I arrived to Geneva, and there was no bridge between the UN, even here in Geneva, and the financial markets, and the big corporate banks. Yeah, it was talk about sustainability and these things, and now certain things are actually, in the same sense, starting to work.
And we're very pleased to welcome you to this maze of this conference. This is usually where we meet. You see how complicated it is.
But so in specific way that what we love about it is it's not just the asset manager saying, I raise my fund and I deploy my fund. It doesn't work. It's a multilateral public-private partnerships where you need the buy-in of the local government, where you need support of governments to factor out certain risks. Yeah, that can be on top. And that's actually where one of the exercises we have here, and Ambassador Frusiger was with us in Davos when we discussed this. Couldn't we just aggregate our funds in order to have a scale and on top create what we call SDG 500, a vehicle which is able to invest in the fund, but that fund, of course, then needs a certain guarantee, also support from a sovereign world fund side, in order to trickle down, so that a green bond is not just a bond, yeah, and you don't know really how much impact is created, but that it trickles down to the small tickets on the ground SME, which you have to build up. So that's the part where I just wanted to share that it's good and bad. And a lot of blended impact funds, or you have financial investors saying, no, open-ended funds, I don't like, yeah, or I don't understand the first loss. Yeah, or then you have to say, do you SDG 5 or SDG 7? Is it, you want to cut down the rural population by SDGs? Yeah, it's really sometimes strange how a focus of a fund or geography is actually done. And that way we try to adjust ourselves with these partnerships, that it's not just us, it's not bamboo. It's really the way with IFAD, we have a different fund on agribusinesses where IFAD is not operating, we operate, but that's on the government side. Yeah, we have another fund with the Build Fund you related to, which is Malawi, but it's also there. It's actually UNCDF team on the ground helping the sourcing, and we work jointly here. So it's a long speech, but I believe the only way is if we come together, public-private partnerships, with a clear alignment, measurements and deliverables, who does what, we should be able to move the needle, but we need much more scale.
Thank you, Florian. So collaboration and aggregation and massification of the vehicle. Thank you. Mauricio, as an entrepreneur, being on the receiving side of such instruments, what has been your experience and what could you share with any feedback with the people designing these vehicles?
Well, it's laughing and crying, I would say. Because you're talking about SMEs, and we know that being an SME, you don't have that much resources. So when you are applying for a blended finance fund, man, it's a lot of work. The measurements, 100, 200 pages to fill out, that's impossible. It's too expensive, and most of the times we don't know what actually is being asked there. So we, for example, we had to hire someone that was a specialist about that. That was actually someone that the bank said, okay, you should hire this guy, pay 1%, and then he's going to do the job. So that's not feasible, you know. That's really tricky. So the second thing is sometimes we are obliged to create some reporting system. You know how much is to build or to come up with an impact report or ESG report? We're paying $100,000. Our financial report audit, Big 6, Big 4 audit, costs like $20,000. We need to set up a team to report. We need to hire some platforms. That's not feasible. It needs to be more simple. You need to, it's a risk investment. So we need to start asking less, and then when people go inside, like the SMEs, then we go adjusting the system. Then we're gonna really succeed. Because now, you're gonna find a lot of trouble to actually find the ventures that would be able to apply for this money.
Thank you so much for sharing that, Mauricio. It's really important to know how it comes across on the ground.
Just one more thing. I think there is a benefit also, which is much cheaper than the money we're getting, coming from the developing countries where we're paying, it's 20% per year interest rate if it's a good money. Otherwise, it's going to cost, 36%. So eventually, you can get this for 10% per year, the interest rate. So that's the benefit, but we are not getting the money.
Yeah. Thank you for sharing. You raised the point of impact measurement, data collection, tracking. Trish, I could turn to you now in terms of how can blockchain facilitate this? Are you seeing use cases? How do you use it? Can blockchain help with this?
Greetings from the future, but also just no, just to dial back, like all the problems that you highlighted when it came to, yes, there's this immense application process, you having to prove a record of having achieved as a company to get those investments. Just to give you an example, right? With Carter Shift, we raised 10 million from 6K citizen investors with an average investment basket of $800. And that is from a community of 12,000 plus people. This is not institutional. This is not grants from big funds or impact investing, companies. This is just from people. So when I say like Carter Shift, a Kickstarter plus Y Combinator, it's crowdsourced. So that's when you say, dial it back a little bit. Money doesn't have to flow south to north or north to south. Why can't it just flow from grassroots, right? And that's what it is, I think, from the future, is like giving us tools. Like, I want to see a certain project in my community, enable that through public governance to say, I will still give you these, let's just say about 10 euros to just like fill up that pothole. Then you crowdsource it from your neighborhood, right? Simplify these things. And then coming back to the question on impact measurement, right? Is like, yes, I trusted this decentralized autonomous organization to fill in that pothole, KPI done. Next time they propose something on the DAO saying, okay, we need a signal here, too many speeding cars, then you can be like, okay, let's put it to vote again. KPIs are met, it's easy to track it. And you can do that through proofs of impact. So once you've reached your KPI, on field you've collected data, then you can put that on chain. It's immutable, you can view it. It can be in the form of an image, it can be in the form of a data, but it's in real time. And I think we've come far in Web 2 to have real-time data. It's just that Web 3, you'll be able to verify it. So, yeah, simplify it.
Thank you for that very inspiring dose of inspiration from the future. I was about to say that my Slido doesn't work, but a question from Al Gore. Thank you. Across the podium, and he was present in the last 2 days during the other sessions. Across the podium, can you agree what is the single largest issue to be successful with impact investing? Funding targets, regulation, political risk? I maybe would hand it over to Saba, and we will then swiftly go towards closing.
I mean, we've discussed this sort of mismatch between what, let's say, institutional investors are expecting, the reality on the markets, and the type of ventures. We have to find different means to bridge that sort of a gap. And I think that part of the agenda is, as you said, mobilizing different sources of capital. I mean, I'll be very honest with you. I have family that have schools in Africa, in West Africa, others who have the largest, staple farms in Congo. They don't go to impact investors. I lend them my money. I sell a house and I lend them my money. This is how we do things. I know their businesses have the right theories of change, have the right KPIs, but they're not going through all the various elaborate. So there has to be sort of also progression where we're asking people. And just one final anecdote on this. There are people I've seen in some of these conferences, especially on carbon markets, are talking about, oh, I have the most sophisticated AI data collection system that will give you all the data. We've taken professors of management who just walked around the premises of the same businesses and find 5 other things that don't work. So it's not necessarily just a technological fix. We have to look at just good sense understanding of business models, impact, and stakeholder validation of different sorts that are not necessarily just powered by technology. Thank you.
Thank you. Anyone else would like to follow up on this quickly?
Can I just answer that question also?
Yes, please.
I think the biggest bottleneck on impact investing is that it's not from anyone to everyone, what you're saying. Yeah, it's usually only qualified investors. I know so many people asking me, Florian, what do you do with Bamboo? It's amazing. Can I invest? Sorry, 150,000 you can, up. Okay, second piece is, on this side, it's usually then long patient capital. It's not liquid. And the third topic is also, you have the dispute between financial return and impact. And if you flip that around, probably using technology, you could move masses much more in impact investing. verified real-time data, and that's something where I believe why technology will be blessing.
Just to add on that, is just where technology really comes here with blockchain is that there are, or with Web3, there are reward mechanisms. If you pull in money for implementing a particular project and a KPI is met, as a celebration, every investor is also given like a percentage of it. Or it could just be that you have a utility now, which is, hey, I want to vote on what we do next. That is power. That is just enabling more grassroots activism. I don't think this is a big guy's game, Like, we have the youngest generation ever that's growing up. And I'm just speaking from, like, being in that generation, And, like, allow us to build the future of tomorrow. Like, don't say come up with your millions in suitcases. Like, I don't have that.
I was in Kabul 3 weeks ago, and I was quite surprised. A lot of the youth are using, about one month ago, they're using all these basically stable coins because of, they don't have access to dollar liquidity and all these sort of things. So you see the uptake happening very fast. Of course, the de facto authority recently banned it because there was a lot of speculation, among them. They were concerned about, imagine the Taliban concerned about consumer protection. But I hope I'm not being good here. But it was it was amazing just to see, as you said, the uptake, they're just doing it.
And it's gamified. That's the whole part of it, right? Why you make this thing so serious? Like, guys, no, let's bring out your balance sheets. Let's talk about, like, super sophisticated ESG metrics. That's not the point. Gamify this. Like, it's like SimCity. We're just playing it in real time. And go. Like, collect your Pokemons, which is like, let's go save an animal. It is. I don't know what's the fascination with big words. And I've been in this conference for, like, past 2 days. If you bought a bunch of 18-year-olds, you want us to be involved, we wouldn't get the AMC, DTX, like, ETF, and, like, I don't know.
Thank you so much for bringing that really fresh, and a round of applause. This is super hopeful and optimistic to know that we as a new generation have a huge role to play, and that we have the technology of our fingertips, the drive to actually simplify things and drive this change. We're already a minute or two above time or more, but just a closing round of what each one of us can do to move this issue. We are already doing a lot, but between now and the next building bridges, let's say, what is actions that we're all taking? And I do have a question of how can platforms like Accelerate2030 add even more value to the work that you're doing? Very generous, thank you. Florian, would you like to start?
Okay, if there's a request, it's, as things go bottom up here, I have 5 kids, they're all Gen Z, and I get a hell of a challenge from them of what I'm doing, why you're doing this. But specifically, the next step is to tap into mainstream markets, financial markets, to open the floodgate, that we're not punishing investors wanting to do impact, SFDR rules, and to show the impact, because we're not looking at the ones who are net negative. And I would hope that there is a trigger of an understanding from the mainstream markets saying maybe we should make sure that any investments we do, are net positive.
How can Accelerate2030 strengthen the work you're doing?
You have an amazing network and you have an amazing voice. Yeah, and there's a possibility to leverage this one. Like with examples like from Mauricio here. That's something where you inspire people and they might understanding it's not just NGO, it's not just a little bit of CSR, it's actually main business.
Awesome, thank you. Trish?
I advocate to bring high schoolers and kids to conferences like this and would love for people to explain what they do to them. It's a great way, I think, to get youth engaged. And how can Accelerate help is you do have a huge network. So like, if it's a volunteering opportunity to go spend time, which I would love to do with Solubio, or it could be with U Energy on field, it's showing the possibility that it's easier to engage with projects and easier to engage with causes rather than being up in the clouds. So yeah, I really think you need younger voices in spaces like this, and to speak in language that is a lot more easy to have a conversation and strike a conversation with. And yeah, to be more accessible and inclusive is all I would say is, I know we have fancy degrees, but that's not the point right now. To solve global issues, I don't think that's going to help. So to speak in a language where you can be more inclusive, just, yeah, grassroots.
Thank you. Wonderful message, Trish. Mauricio?
Well, being very honest, coming from Brazil and being a company that is actually able to access funds, I still can't see the difference between impact investment and a normal investment. You are still asking us 10 years to exit, tag along, and all those things. You know, you're putting pressure on entrepreneurs to grow, and eventually you get dragged because, you know, it's time to deploy money, then we need to recover the money. So what is actually the difference? I mean, you're asking us to do actually more than what we do if we access normal money. Then there is a little bit of a difference in the spread rate. Like, you know, that's. I leave my question here for you. Perhaps next year we can talk about. And about the Accelerate, I think having, creating the space, the rooms for us to have this honest conversation, saying that that's the challenge here, you know, and connecting us with the investment world, impact investors world, that should be, we should have more of these meetings.
Thank you, Mauricio.
So, I mean, answering the second question, I was struck by the R&D heavy sort of high growth sort of businesses that were here. And I was curious what you should bring for the next session is for policymakers. What is the R&D agenda? What is the policy regulatory agenda for these specific kind of business model that need to push to enable them to grow and accelerate, you know, 2 or 3 times? And I think that's something that UNDP will be very clear in places like Brazil or Africa. I mean, you had B2G models, you have B2C, you have different ones. That will be very interesting. Thank you.
Thank you so much. Thank you so much for the very inspirational and honest insights. I think more of these conversations are needed. Luckily, we have the evening. We have one more day to continue exchanging. Please come speak to any of the speakers and ourselves. On an ending note, we just wanted to tell you that we're still here. Tomorrow we are present at the health session led by Baraka Impact Finance, and some of our entrepreneurs will be speaking there as well tomorrow at 9 a.m. And we will be hosting a lunchtime networking tomorrow here at Building Bridges. Come find Mala, find the signs, and we're happy to continue these conversations. If you're interested for collaboration with Accelerate2030, we're thinking around a few areas where we see we can generate more impact. Access to funding, that's the topic that we've been discussing today. Facilitating access to markets. Continuing the work around circular and regenerative economy and mainstreaming it in our programming and in our work with partners. And collaborations with corporates and financial institutions. Tony Kypris, our advisor, is here. He came from the UK and he's conducting this research. So if you're working in some of these institutions, come speak to Tony and us to see what's possible. Thank you very much. Thank you for your time and your curiosity to bear through the last slot of a long day. And we hope to continue the conversations after the event. Thank you.